Popular dating app Bumble is set to go public on Thursday. So today, let's take a look at the financials, the valuation, and determine if this stock is worth buying. Bumble was founded in 2014 by a co-founder of another popular dating app, Tinder. Bumble differs from traditional dating apps by only allowing female members to initiate the conversations. This has allowed the app to become the second most popular dating app in the United States, behind only the aforementioned Tinder. The company is set to go public on Thursday, February 11th, by offering 57.5 million shares at around $43 each. This would value Bumble at over $8 billion. Of course, once the shares are publicly traded, it is expected that the shares might trade over the $43 price set by the underwriters of the IPO, and will determine if the shares are worth buying in today's video. But first, Bumble isn't the only dating app in the company's portfolio. In fact, Badoo is the company's largest in terms of users and paying users. And given its popularity in markets outside the United States, Bumble is truly a global brand. Like many dating apps, Bumble and Badoo operate under a freemium business model, where the majority of users use the app for free while others pay for certain features. In 2018, the company had about 1.9 million paying users spread across both apps. In 2019, that number grew modestly to over 2 million. Through 9 months in 2020, the company's growth accelerated to over 2.4 million paying users, primarily driven by growth in the Bumble users. Not only is Bumble the fastest growing dating app in the portfolio, it also earns the most per user. Between 2018 and 2020, the company earned between $23 and $26 per Bumble user versus just $11 and $13 for Badoo users. In 2018, the two apps combined have revenues of $360 million. However, the company lost about $16 million after expenses and $21 million after income taxes. In 2019, Bumble grew revenues to over $488 million, and after expenses earned an impressive $93 million. After taxes, the company netted about $66 million in profits. Through 9 months in 2020, Bumble had over $412 million in revenue and operating losses of just $6 million. After taxes, the company had a net loss around $26 million. The company finds itself in solid financial position with about $100 million in cash. However, that is offset by having about $800 million in debt. However, part of the IPO funds will be used to repay some of this debt and bolster the cash position of the company. Now onto the question you're probably all wondering. Should you buy Bumble stock? And I actually think this is a fairly easy decision to make because you can compare Bumble to its closest rival in the dating app business, Match Group, owner of Match.com, Tinder, and other dating properties. In 2020, Bumble's revenues grew about 15%, essentially equaling Match Group's 16% growth rate. So the two companies are comparable on the growth rate size. From an average revenue per user, or ARPU, Bumble came in around $18.48 per user, whereas Match Group is closer to $17.91 per user. However, Match Group is a much larger company with trailing 12-month revenue coming in around $2.4 billion, which is nearly 5 times the size of Bumble. Match Group currently trades at around 19 times those trailing 12-month sales, which gives the company a valuation of around $45 billion. If we equate the same 19 times sales on Bumble's most recent sales total, we get to roughly a $9.5 billion valuation, which is about $1.5 billion over the $8 billion valuation Bumble is expected to go public at today. That means if shares are to pop a considerable amount on the first day of trading, it's likely that Bumble will be overvalued compared to Match Group. However, any share price valuing Bumble at or below the $10 billion mark could make a good buying opportunity. Are you going to buy Bumble stock? Let me know in the comments below. And be sure to follow me on Instagram and Twitter. Links are in the description below.